Hello and welcome to EBAday 2020. I'm Hannah Wallace, and kindly calling into our FinextraTV virtual studio now is Amit Mallick from Accenture to talk to us about open banking and PSD2. So welcome, Amit. Thank you very much for calling in.
Thank you, and it's my pleasure to be here.
It's good to have you on. So yes, this is a really big topic for this year's event because open banking is a real force for change and also drives new business models. So I'd like to start by hearing your thoughts on this and also the debate we keep returning to around future bank platforms. So let's start there.
Sure. So the way we see it, open banking is definitely a two-way street, and banks across the world are using open banking concepts to further power the evolution of their own banking businesses. The two predominant business models which we see in the market today are the first model, bank as a service. This is more the classic definition of open banking, where a bank exposes a set of APIs and allows third parties to consume these APIs and hence extend the bank service onto the third party channel. Examples like could be treasury as a service, loan API as a service, or payment API as a service. This is particularly suitable for banks who don't have the distribution capability and outreach, and but would want to use third-party partners to make their products and services more readily available. The exact converse of this model is what we call as bank as a platform. In this business model, what the bank does is they accumulate and aggregate APIs from other third-party channels to build on top of their own channels and platforms, which means that a bank is consuming APIs from other non-banks and fintechs and providing new set of services to their customers. Things like personal finance management, business finance management, request to pay, and financial and non-financial marketplaces are very good examples of bank as a platform. Particularly suitable for banks which already have a large customer base and want to really offer new products and services to their customers.
Sure. All right. So as we move from compliance to the commercialization of open banking and realize the benefits along the way, how do you go about measuring its success? What about that?
Very interesting question, and I must admit, not very easy to answer.
Yes.
But I'll give it a shot. So I think the measure of success, whether it is open banking or traditional banking, has not changed. The macro measures of success still remain the same. We are still talking about customer value, things like net promoter score, things like return on investment, things like earning before interest and tax, etc. So these macro success factors haven't changed. But what we have seen in open banking is the evolution of a few more operational measurements, which typically banks are using to measure, monitor the progress and maturity of their open banking proposition. And maybe let me try to throw some light on what these are. So the first thing we are talking about is what business value is open banking generating for us. There are various ways to measure this. You could almost calculate the new revenue gain because of launching of a new open banking proposition or a new API or a new use case. Or on the flip side, you could start thinking about revenue at risk, which means that what happens to me if I don't launch this product? What do I lose? What if my competitors have a similar product in the market? There are other important measures of success, like number of active users, number of active customers, number of ecosystem partners, and what's the cumulative network effect you are getting out of open banking. So that's more along the revenue dimension. I think then there is the customer experience dimension around number of customers who are using this open banking product of mine. And how do you measure that? You can measure that by number of subscriptions or what we call as number of renewal of consents. And probably this is a topic which is worth exploring because as you would realize, to access open banking, a customer would need to provide consent. So if I have provided consent more number of times, that means I'm a frequent user. So actually measuring the number of consents is the easy way to find out how much is a customer using a particular open banking product or service. The third dimension, I think, is around the third party and the developer experience, because open banking is all about ecosystems. So, how do you measure, the third party experience? And this can be measured by number of external APIs or open banking products you have for third parties. You can also measure it by onboarding time for third parties and how fast they can access your product. You can also measure success by measuring the number of developers that have actually used your API and launched the end customer proposition in the market. And then there is a bit of ecosystem measurement around, how many parties are there in the ecosystem, how are they interacting with each other. So all of these things actually roll up into the wider macro KPIs which a bank have. But these, I think, are some of the additional success measures or additional measures of success which open banking has introduced.
All right, and we've also been talking a lot lately about the impact of COVID-19 on the industry, but I'd really want to home in for the purpose of this interview on the impact it's had on open banking and its progress. So what do you think about this space?
Yeah, so the pandemic has created new set of challenges, difficulties, uncertainties for all of us, and I won't labor too much on that. All of us are aware of that. What I think it has done to open banking is that it has actually given a boost to open banking proposition. And when I talk about the impact of COVID-19 on open banking, I almost think about three dimensions. What has COVID-19 done to customers or consumers, and how has open banking helped to solve it? And I'll give an example. COVID-19 has created financial uncertainty. And more customers today need to understand their own financial needs, their own financial requirements, their budgetary requirements, their financial projections, etc. And open banking is helping customers to do that. So, for example, a London-based fintech called Tully has launched a solution for profiling customer spending patterns, creating customized budgets for them. And this is all based on real-time income and expenditure of those customers. And this also is clever enough to factor in whether a customer is receiving furlough payments or not, and adapts the situation and the projection and the recommendations according to that. So a fantastic example of how open banking is helping consumers in the pandemic world. A similar example extends, from a business perspective, or where organizations today need a much more deeper appreciation of the health of their business, which essentially means that they need to understand their income and cash flows better. And open banking, with its ability to read transactions, is definitely helping organizations. This works two ways, because organizations today are in need of credit because they don't have enough cash to sustain their businesses for a long time. Banks also need to understand which organizations are sustainable and which fit into their risk profile. And open banking, with its ability to read transactions, is definitely going a long way. A fintech-led consortium called Credit Kudos in London recently caught my attention, because what they were doing is they launched a product called COVID Credit. And it was entirely based on this ability for them to read multiple data points and recommend lenders around whether they should extend a credit to an organization, whether it's a genuine recipient of credit or whether it's a fraudulent case or not. Mm-hmm. And finally, I think governments and regulators have been using open banking to effectively disperse payments and furlough payments and all of their stimulus packages across various geographies. So another fintech example which I came across recently, a company called Railsbank, who launched a product called Lightning Aid. The entire product was based on ability for government to actually create prepaid virtual cards, which then they would distribute onto customers who would need help from stimulus packages and government grants, etc. So multiple examples around how open banking is supporting COVID and actually helping us to live the new normal, as they call it.
Mm-hmm, mm-hmm. That's an interesting perspective, open banking helping us through these tricky times. And I just want to end on and sort of taking all of that into account then. Do you think banks are really sort of truly embracing the full-scale operational and organizational impact of open banking, or do you think there's more to be done? What about that?
So most banks approached open banking as a technology challenge. Rightfully so, because the concept of APIs and all of these things were new to them. And I think they didn't initially pay enough attention to this aspect of operating model, organizational change, cultural change, which this brings in. But more and more, as I see it, banks have started embracing this. And different banks are at different levels of stages of maturity when it comes to this stage. But I think what we have seen based on international experience is that it is important to align the governance structure and the organization structure, especially when you want to focus on open banking and you are making a significant investment uh, uh, around the space. And what we are seeing is the evolution of what we call as a three-tiered federated business organization structure, where the top tier is responsible for strategy and policy at the bank level, makes all of the important strategic decisions. The middle tier is the tier which owns the open banking product, opens the P&L of the product, and really is the business. And this is what we are telling banks, that you need an open banking product owner. This is not a technology artifact. This is a business artifact. Like any other product which you have, like a loan or mortgage, you need an open banking product owner. And then there is the third tier within this three-tier model, which is the traditional technology and operations part of the bank, which would build, run, maintain, and manage that product. So that's one aspect of organization structure, which banks are slowly started to adapt. What open banking is also creating is the need for a new set of capabilities within the bank. And when I say new set of capabilities, you are talking about capabilities, especially in the space of third-party management. Because open banking is all about ecosystems, which means you need to have third-party partners. One of the things which banks have not yet fully understood internationally is that gone are the days when you can take 6 months to bring in a third party or a partner. The evolution cycles and the customer demands are much shorter these days, and you need to be able to react quickly, which means that you do a nice innovation experiment, but now you need to bring it to the market, not in 6 months, not in 6 weeks. And that needs a significant change in terms of how you manage your partner ecosystem and third parties. There are these type of new capabilities which banks need to rethink about, because that entire procurement book which large banks have has to be rewritten in the world of open banking. And we have seen genuine examples where banks, in spite of the best ideas they had, were not able to progress because they just couldn't onboard or operationalize a new relationship under open banking.
Well, Amit, you've certainly painted the picture for us there, and it's really great to get your insights on that. But we'll leave it there for now, and I hope you enjoy the rest of the event. So thank you very much for calling in. It's been a pleasure.
Thank you, Hannah. Nice to speak to you.